Savijit Chatterjee, recording our weekly session of Chartsarefun. This is for the week of April 6th, recording this on Sunday, April 12th. Today, we're going to talk about semiconductor. This industry has been on fire. It has done tremendously well since the last couple of weeks, recovering sharply off those lows. Our Chartsarefun Substack site is chartsarefun.substack.com. We appreciate you subscribing to it through your email. It's free. When the blogs come out, you'll get them to your email. Our YouTube site is also Chartsarefun. We do believe charts are tremendous fun insights. We appreciate you subscribing to this channel. And then if you hit the like button, if you like the videos, we are extremely grateful for that. The key is we don't provide investment advice. This is more of sharing fun chat patterns and then showing you where we think the market's kind of technical tea leaves are telling us about directions. And then use it in your investment decisions, but not by taking any investment advice from us because we are not registered investment advisors. So as we talked about semiconductors, the key ETF is called VanEck Semiconductor ETF SMH. And we can see the sharp climb in the last 8 trading days, starting off from the previous week. That was a shortened week with the Friday market close from Good Friday. But starting off from that Tuesday, Wednesday, Thursday, and then 5 successive days this week, it has just absolutely gone up in a vertical fashion. Key is, what are we seeing? We are seeing, if you join the tops, a dome-shaped topping pattern. You can kind of see that the dome, once it peaks out, then starts coming lower. And we see RSI signaling a topping pattern with negative divergence. Lower highs in RSI, that's an indicator of this potentially being a dome-shaped topping. We are right at the top of the dome. We tested 441 and pulled back to close near 436. We shall see what happens next week. Key is this gap that you see. This gap happened after the last-minute ceasefire deal was announced by President Trump on Tuesday evening after the market closed. So Wednesday, it opened up with a gap. And from there, the market just kept climbing for 3 successive days. What is going on in the space of AI is Anthropic is on fire. They've announced 2 major platforms. One is what they call as Mythos. Mythos is their next generation generative model that is apparently finding vulnerabilities in operating systems, in securities, and so on, and patching it. So software stocks in general. And then they also talked about a managed platform, managed agentic platform that can really scale agentic to the extreme where people can basically do a lot of work that in the past humans had to do using SaaS softwares, whether it's the Workday, whether it's the Salesforce, whether it's the, all the big players got impacted. Only thing that held steady in the software sector was Microsoft. It didn't drop as much. It dropped initially, but then last part of the week held quite steady. And so that's perhaps the strongest software sector. So IGV is the ETF, and that absolutely tanked to lower lows. In the past, it had been holding 76. It tanked, and it tested 73.9 last week. So semiconductors is beneficiaries of all this AI inferencing because you need a ton of GPUs. The king, of course, is NVDA. We can look at NVIDIA's chart shortly. There are Intel and AMD. Those are the biggest CPU manufacturers, but at the same time, AMD's also got GPUs that compete with NVIDIA. Intel, as you know, the government has taken investments. We look at them. And then there are what you call as ASICs. These are AI-related chips that the hypercloud vendors, whether it's Google, Microsoft, Amazon, are manufacturing with Broadcom. So we look at Broadcom stock as well. That's absolutely been on a fire. So in the semiconductor space, we can look at NVIDIA. We can look at TSMC, the largest fab in the world that manufactures a lot of the NVIDIA's chips and many of the other chips. We look at AMD and Broadcom and Intel. Those are the 5 key semiconductor stocks we're going to look at. And then we look at, after that, crypto, Bitcoin, and QQQ. So here's the dome-shaped topping pattern. We are worried about SMH. And looking at the king of the SMH is NVIDIA. And we can see clearly a head and shoulder pattern right here. Potentially a left shoulder from 164 is really the key neckline support. The 164 going to 184, coming back to 164, going to 212, forming the head over a long extended period, coming back to 164 again, towards late March. Now we can see 8 successive days of climb, hit a level at 190 exactly and pull back to close near 188. If this is slightly higher right shoulder than the left shoulder, 184 was this 190. But if this fails here and it breaks below 164, the measured target from 164 to 212, we're talking about 48 points. Subtract 48 from 164, we're talking about 116 is the measured head and shoulder target on the NVDA. And we can see that there is setting up for a bearish cross of the 50 declining going below the 200. The only thing that we need to be cautious about is when the 200 period is climbing, those bearish crosses sometimes are false signals. So while we can see the 50 going below the 200, it may turn out to be a false signal and it could climb right back up if it turns out that the semiconductors continue to have momentum and the entire Iran situation is completely resolved and the market is back to its highs. It's already at, semiconductors already at its highs, but QQQ and NASDAQ and Dow Jones is not, or S&P is not at their previous highs. But key is again head and shoulder on NVIDIA. TSM has got a dome-shaped topping pattern similar to SMH. As you join the kind of curve through the peaks, we can see a negative divergence right there. Similar kind of pattern as SMH, right at the top of its dome. It failed at 378, closed at 370. If this fails and starts declining, we'd watch out for more downside on TSM. AMD, similar kind of dome shape. It's already got a pattern of lower highs. 267 was the high in October. 266 came close to 267, 266.96 in January. And the most recent high that we saw was at 249. So it's already flipped on the dome to the other side of the dome of the decline with lower highs and clear negative divergence. AMD, watch out, not looking like a bullish chart. We believe it's going to fail here and go and break below 188. And once it breaks below 188, we're talking about significantly lower values on AMD in the weeks and months ahead. Broadcom, which has got a ticker symbol, AVGO, AVGO, again, a dome shape, lower highs. The high that it formed in December was at 412. Most recent high was at 376, closed near 371. Dome shape, negative divergence across the last several months with lower highs in RSI. If this dome shape reverses here, starts going lower, we'd watch out on Broadcom as well. Intel, we did a longer term chart because it had an absolute ballistic climb. We can see this is a monthly chart, and just in the month of April so far, up 41%. We know that the government has got a stake in here. They've recently won some deals from Google. They've been winning deals across some of the hyperscalers. And this is at a key 2020, 2021 peak at 62.63. This is where it failed, 63.39 to come and close at 62.38. If this resistance holds it back, we wouldn't be surprised to see Intel pull back to form a right shoulder towards that 38.39, and then maybe break higher if the momentum in Intel's fab, beneficiary of the government's spending and government's investment, plays out and it breaks higher. But near term, very overbought, RSI at 73, hitting key resistance from the 2020-2021 high at 62.63. A right shoulder pullback could be what we expect in Intel. So we'd not chase Intel here. We caution basically letting for it to pull back. At 38, if it does pull back, would be a great buy, because if you took a from 17 to 63, if you take a inverse head and shoulder move right from there, 17 to 63, we are talking about roughly 46 or so. So 46 to 63 takes us towards 109. So that's the upside on Intel once this inverse head and shoulder. Even if it's not a full right shoulder, at least a handle formation is what we expect moving forward. And then maybe based on how deep the handle is, this could be worth a buy at that point once we see that pullback. But at this point, stay away from Intel. Cryptos trades 24/7, and this is exactly that we see what happened in the last few hours. From last night, the BTC, the top crypto Bitcoin broke down. This is because of the deal being called off. There've been negotiations going on in Pakistan, Islamabad, but Pakistan, as much as they tried to declare some form of a deal between US and Iran, nothing quite panned out. And Vice President Vance was there, and he said that they have for now followed off their talks. So that caused a sharp drop from 73 to 70. What is this pattern? It's a W-shaped double bottom pattern. So from 65 to 69,300 4,300. Add that to 69,300, 73,600. It exactly met that. In fact, met slightly higher, $200 above to 73,800. And from there, this beautiful negative divergence. Beautiful, not so much for the bulls because this is a bearish pattern, but sadly for the bears, beautiful for them because this is the negative divergence for where the topping happened. And from there, it broke down. If you take a slightly longer term view on crypto, on Bitcoin in particular, this could be a head and shoulder top. And there have been many that are calling for the break of the 60,000 and this measured head and shoulder, if that pans out. So far today, we're down 3%, $2,170 is where the drop is. If this drop comes and falls below 65, 65 to 76 is 11,000 is the height of the head. Subtract 11,000 from 65, that measures to 54,000. So if this is a head and shoulder pattern that pans out in Bitcoin, we'd watch for 60,000 to break and go to 54,000 new lows. So that's something for us to watch. QQQ on the monthly chart, if you look at what happened in 2022, on the monthly chart, we noticed that when the first couple of months of sharp drop happened, we had a counter trend move. This was the month of March of 2022. And then that failed, and then it pulled back to test its rising 50 period moving average. A similar kind of first couple of months of drop like it happened here, and a counter trend move. Let's see if this holds here or it breaks. And then from the next month onwards from May, we start a decline to lower lows below 555. 555 to 635, you're talking about $80. Subtract 80 from 555, 475 is the target. Slightly above the 50 period moving average at 432, but that's where we think QQQ could be headed. So this counter trend move, as we saw in 2022 as well, this counter trend move is just temporary for a month, and then the breakdown happened. Similar kind of a month counter trend move, and then the breakdown cannot be ruled out. However, on the bullish side, if this flips higher, the MACD dips only for a month and then breaks higher, like we saw in the 2025 tariff flow. So this is like a tariff kind of a situation. We know that this is a midterm election. If anything, then the Trump administration does to continue bullish momentum, then this could be off to the races, because a break above 555 to 635.80 on the other side, if that breaks above 635.80 to plus 635 takes us to 715. That's a possibility. There are many who are looking for a melt-up move in the markets for the second half of the year. That could then be the case. But if not, from a bearish perspective, a repeat of what happened in 2022 happens, expect it to break below 555, and the measured target is 475. And QQQ on the daily chart has a dome-shaped topping pattern, very similar to what we saw with SMH. That dome-shaped topping pattern, negative divergence in RSI, lower highs, that breakdown is again testing that like the lower high on the dome. Two double tops at 635, then it coming up to test at the tip of the dome, failing right there, 613. If this then fails, this gap up was bullish, no question, but look at the volume. Since that last 8 days, it's been going up, but at declining volume. That's a bearish thing. RSI is testing that lower high right from a negative divergence. If RSI fails here, price fails here, breaks below 555, we're expecting 475 as the target. So with that, just to sum it up, semiconductors, as much as all the euphoria with AI spending and the huge, insatiable spending of GPUs across the world, be cautious on the dome-shaped topping pattern on the key ETF SMH. That breakdown can break us a lot lower. So as the higher highs are forming, lower highs in RSI is how tops happen. NVDA potentially head and shoulder breakdown. If it breaks 164, measured target is all the way down to 116. So watch out on that. TSM, dome-shaped topping pattern, similar to SMH. AMD, also a dome-shaped topping pattern. In fact, here it's printing lower highs. Broadcom, dome-shaped topping pattern, printing a lower high from what it printed in December. Intel, longer term, has got an inverse head and shoulder potential possibility, breaking above the neckline here would be a bigger move, which unlikely will happen right away. We expect a right shoulder pullback from 63, 62 towards that 38, 39, measuring what it did in the left shoulder in 2020, and then that breakout. If that breakout does pan out above 63 from that 17, we're talking about what, $46 added to 63, 109 is where that could come. But till then, at least the next several months, be cautious on Intel having a pullback and look to kind of go in long on it at that 38, 39 level. Cryptos, W-shape, double bottom pattern, 73,600 was met, negative divergence, the deal, if it holds 70,000, that's bullish, and then it can reclaim the climb. But if it doesn't, it is potentially set up for a head and shoulder breakdown, and that from the left shoulder at 74,000, right shoulder at 73,800, head at 76,000, 65 is the neckline, 65 to 76, 11,000 subtracted from 65, 54 is the Bitcoin's target if this head and shoulder pans out. So you're going to watch in the next few days if it is able to break 74, above 76 and climb. At this point, won't be surprised to see a head and shoulder breakdown if QQQ is going to break down. And QQQ, long-term monthly chart, if it repeats 2022 kind of a like a cyclical bear market pullback to test its rising 50-period moving average, then expect it to break 555. 555 to 635, $80, subtract 80 from 555, 475. So this continues to climb. By the time it drops, this may come up towards the 470, 475 is what we expect over the next several months. QQQ on the daily chart is a dome-shaped topping pattern. Negative divergence is what dome-shaped topping patterns predict, emanate when you start seeing these topping patterns. So that dome-shaped topping pattern, lower highs already double top at 635, the recent high failing at 613, declining volume on this climb. This gap was bullish, but if this gap then gets bridged and it starts falling, we'd watch out for a break below 555. Good luck investing. We'll talk to you next week. Thank you.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.